Florian Grummes from MidasTouchConsulting.com returns today to revisit some price targets and just where are silver and gold going short term. All this and more on this episode of Metal Money. I'm your host, Patrick Vieira. Florian Grummes, welcome back to Metal Money. How are you doing?
Thank you. Thanks, Patrick, for having me. I'm doing well.
Glad to have you back on again. You know, Florian, the last time we spoke with you, you mentioned 3 price levels for gold that you are watching before it's off to the races. The first was 1850, then 1900, and finally in November, we saw a high of 1960. Now, since then, we saw that gold took out the first 2 targets and it touched 1960 just for one day. But the gold price has since fallen back to the 200-day moving average, which is at around 1850 right now. So my question is, are we back at square one for gold to clear these 3 price hurdles again, or has the price action this year changed your outlook for gold?
Well, I think, first of all, what is very important, gold made a higher low in early January. So we had the low in November, 30th of November. The low was at 1765. Then we had a nice, rather fast rally towards 1955. A great start actually into the new year. Everybody thought like, wow, the gold train is up and running. And then on the 6th of January, suddenly the first sharp sell-off, and then 2 days later on the 8th of January, another sharp sell-off, which actually to me seemed to be pretty manipulative moves. That was actually the only thing that surprised me, especially on the 8th of January, when gold really crashed basically down to 1830 and then got sold off into the Asian session on Monday down to 1800. But that 1800 level is still a higher low in comparison to the November low. And that until today, even though we have a rather disappointing price action over the last few weeks, or at least, let's say, I mean, the market is going sideways, right? It's just dancing back and forth around the 200-day moving average, if you want. But we have a higher low in place so far. So that's good. As long as that doesn't change, I stick with my expectation that gold at some point over the next few weeks, maybe 2-3 months, towards spring should make a nice run towards the $2,000 range or level. This can happen actually very fast within a few days. I think overall the macro setup or environment is there for gold to make a jump of $100 within a day or two or within a few hours, just given all these crazy news, all these crazy developments. I mean, the viewers know it, you know it. It's a weird, crazy, super volatile setup out there. So that's the main expectation. Of course, if gold goes back below 1800, I think something is wrong in that kind of scenario of view. And then we probably will test again those 1765 and maybe even a little bit lower. Usually, if you compare from the past bull markets, we had a multi-month correction since the summer top in August. Totally normal, totally healthy, was to expected. And once gold is coming out of such corrections, it's kind of like shaky. It's not a straight trend up. It's back and forth, back and forth. And then finally, within a few days, it makes a new fire. Then it retraces quite a lot of it. And then again, and that's actually what we're experiencing right now. So that remains my main expectation for the next few weeks or maybe 2-3 months until spring. And if gold moves down to 1765, I would be still willing to say, okay, just another feet to stand on or another foot to stand on in terms of something that we've seen. Double lows are always a nice thing for the market, right, to turn around. So that would be also acceptable. Anything below 1765, of course, would deteriorate the technical picture. But look, we are still nearly $100 away from that number. So there's no reason to worry. You have to accept that gold is coming out of this multi-month correction and it is not in a new established uptrend with strong momentum. This still takes time. It's a back and forth kind of thing. And I guess my expectation remains summer, midsummer, maybe early autumn. That's when gold really gets a trend going again. And that's where you then probably see a breakout above 2000 and also above the all-time high. And then we should also see new all-time highs towards the end of the year.
Okay, great. You mentioned manipulated moves at the beginning of the year. What led you to say that, manipulated moves?
Of course, the truth is, on the 6th of January, gold had made a nice rally, right? It was basically within 35 days, it came up from 1765 up to 1955, nearly $200 in a short period of time. So generally speaking, yes, there will be some profit taking. Yes, the market was overbought, but these kind of moves out of the blue, like until 6th of January, it moves higher and higher, and then suddenly, bam, and the market immediately tanks like $60 and recovers a little bit, and the next day it goes another $70 or $80 lower. This didn't really feel like normal market action, and you can see like lots of contracts have been dropped onto the market on those days, and we had something similar on the 9th of November, two months earlier, right, when gold also was running up to the 1965 level, and more or less out of the blue, it turned around. So I think it's desperately they're desperately trying to defend those levels, because as we all know, a rising gold price clearly shows that there is something wrong in the system, and it's basically the indicator, the ultimate indicator, maybe besides Bitcoin now, but the ultimate indicator to show there is something wrong. So as long as the gold price is doing what it's doing now, trading sideways, moving slowly higher again, it's all fine. But if gold breaks above 2000, it's clear that something is happening in the bigger picture, right?
Okay, so GameStop actually exposed the that there is a bit of financial or manipulation going on in markets.
Exactly. I mean, you see that they just changed the rules, and this has happened so often in the past. It happened to the Hunt brothers nearly 40 years ago. I mean, they tried to corner the market, so maybe it's a little bit different thing than now with the silver short squeeze. But in the end of the day, yeah, authorities simply change the rules, and then if you're not have a plan for that, you find yourself in a very challenging or difficult situation. So I personally rather not participate in these kind of things and stories. I find it exciting, I find it entertaining, but for example, for me, there was no reason to buy into silver over the last 2 or 3 days just because of this silver short squeeze story. And it was clear that at some point it will come back down also. So I love to play silver from the physical side and keep it simple. And of course, with mining stocks.
Okay. Getting back to from a technical standpoint, how strong is the 200-day moving average as sort of a floor for gold prices moving forward?
Well, the longer the market sits around this number, the more it loses its strength, right? But this average is still rising. It's a moving average line that many market participants look at. So it has certainly quite some support to offer. And again, as long as gold can hold those levels where we are right now, let's say 1830 until 1860, this kind of range, more or less, it's all good. Only a decisive move lower would basically raise question marks. But then again, we also know from the past that often these one final shakeout needs to happen before the market then can turn around decisively higher. So it's a tricky kind of setup and market. It's always been, and it will always be.
Yeah. There's two sides to every trade, but I guess, being that we're hearing so much about supply, especially with silver supply, the demand outstrips supply. A lot of shops, their shelves are empty. So I think maybe that's another factor that guys are trying to consider in there. But Florian, there were 2 price correction phases in each half of 2019, and each lasted about 3 months. It's interesting that the low in late November of 2020 for gold came also at about 3 months. Do you think the November low marked the end of the correction in gold, and since then we are really seeing the next leg of the bull market gradually being played out?
Yes, that's my assumption until now. Um, Again, gold is coming out of such a multi-month correction, and it was a deep correction. So it's not the same correction that we have last year between, when was it, February, March. It's a different type of thing because we had a 2-year uptrend, a massive uptrend, and massive uprun in gold from 1160 to 2075. Gold gained nearly $900 an ounce, nearly up, I think, 80% or something. This was a big move for the gold market. Of course, the crypto guys are laughing about it, but it was a big move for the gold market, okay? And it takes time to digest that kind of gains. So gold has corrected $300. It came down to 1765 late November. And now it's trying to get back up. It will run against this new resistance zone around 2000, 2050. It will run against those levels a few times. This will take some time, probably. And only once we get the breakout above those numbers, above the all-time high from August last year, you will really see momentum catching up again. That's what's right now missing in the sector, okay? The market is trying to come back on its feet, and it's a process. It simply takes time, and it's still a little bit vulnerable. And that's why you also see all these constant sudden sell-offs and pullbacks and shaky setup overall. So my assumption is we run towards those 2000, 2050 somewhere in spring. Then we will see another pullback, maybe to 1900, maybe even to those levels where we are right now, but that would be already deep. And then later that year, at some point, gold will be able to break out above those 2050 kind of resistance zone.
One of the things that holds the gold prices down, as you mentioned, is a dollar that gets stronger. Can you help explain why we are seeing a dollar somewhat getting stronger in the current environment that it's in, where we're going to see quite a hefty amount of stimulus?
Yeah, I mean, I think one reason could be, for example, the ECB had lowered the weekly money creation or currency creation for a few weeks, I guess. And while the Americans, and especially with this new President Biden, it was expected that the stimulus would come, but then it delayed quite some time, and all this hickhack with the elections, it basically was unclear when the stimulus will come. At the same time, the Europeans basically stopped creating as much as they used to create on a weekly basis. And then you have maybe a fundamental explanation why this has happened. I think there's no change to the larger trend. And I also want to say, yes, the dollar has an influence, of course, on the metals markets. But then again, if you compare where it was 20 years ago and where it is now, and compare this to where the gold price is, I don't think that these fiat currencies are really that important at all. I don't care too much about it. I have to be very honest with you.
Florian Grummes, we appreciate the time that you've given, and we wish you all the best for the rest of 2021. There you go. The outlook does indeed look good for silver and gold. As always, let us know what you think in the comment section below, and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.